It's the appointed time and we have a quorum. Let's get started. Welcome to the panel on financial affairs. Agenda item 1. Information papers issued since the last meeting. After the 23rd of January this year, we've got one information paper. The details are set out on the agenda for members' reference. Agenda item 2. Items for discussion at the next meeting. The regular meeting in March will be held on the 2nd of March 2026 at 9:30 a.m. It's a Monday. The administration proposes discussing the following items. 1. Enhancement to the preferential tax regime for funds, family-owned investment holding vehicles, and carried interest. 2. The Mandatory Provident Fund Schemes Authority's budget for the 2026-27 fiscal year and the latest developments of the EMPF platform. 3rd, the Insurance Authority's budget for the 2026-2027 fiscal year, and 4th, Accounting and Financial Reporting Council's budget for the 2026-27 fiscal year. Do members agree that we discuss the above 4 items? All right, thank you. Agenda item 3, on the work of Hong Kong Monetary Authority. I see that the representatives from the HKMA are already here. Before the meeting, the HKMA submitted a paper. It is tabled in front of you. Welcome again, representatives from the HKMA, for attending this meeting. I'll first invite Mr. Eddie Yu, Chief Executive of the HKMA, as well as his colleagues to give us a briefing. Please be as succinct as possible. Mr. Eddie Yu, please. Good morning, Chair. Good morning, members. This is the first time for the HKMA to give a report to members in this legislative session. Our terms and reference is to maintain currency stability within the framework of the LERS, and we strive to promote the stability and integrity of the financial system, including the banking system. I will first talk about the macroeconomic situation in the world, and then my colleague will give members a report. Starting from the US, on the left-hand side, you see that there is a chart, and we mainly look at the labor market as well as the inflation situation because it affects the monetary policy. You see that the orange line shows that there is a downward trend. After that, there is a flat line, and the rate stands at 2.67 in terms of the inflation. As for the blue bars here, we see that there's a slow fall of the number of jobs in the US. And this is different from the trend in terms of the interest rate. Also, with the rapid development of AI, you see that there is a strong allocation of capital. So you see a steep increase of Mach 7. So this could be an uncertainty or a risk factor that we'll have to pay attention to. The last chart shows the US rate projection. If you look at the US Fed Reserve's dot plot, they believe that there will be 1 interest rate in 2026. The blue line indicates the market projection is more optimistic. It shows that there will be 2 interest rate cuts. Now turning to Asia, we see that with the implementation of the US tariffs, countries around the world are concerned about the market development. On the left-hand side, you see that exports are still very strong in Asia. In the middle of last year, there was front-loading. And also, because of the AI trend, there was a surge in sales of electronic products, especially in Asia. And on the right-hand side from the chart, you see that there is diversified development of the market. exports from Asia to the US, there was a slow drop. However, within Asia Pacific, trade increased. The third charts show the flow of capital. Last year at around April, there was some outflow of capital, but then we saw inflow of capital in the second half of last year. Now, in terms of economic growth in Asia Pacific, there was a moderate growth, but basically it was a steady growth last year. Now, in mainland China, the annual growth was about 4.5%. In Q4, spending and investment slowed down. In the middle, again, you see that the total export saw an annual growth of 5% last year. There wasn't a significant drop of exports to the US, but to the other markets there were increases. Now, this year marks the inaugural year of the National 15th Five-Year Plan. The main points of the 15th Five-Year Plan includes expanding domestic demand, modernizing industry system and development, as well as enhancing technological self-reliance. We see that there is a proactive monetary policy as well as an accommodative currency policy, and all these will help boost economic growth. In Hong Kong, we tie in with the national development, of course. In Hong Kong, we see steady growth. In Q4, there was a growth of 3.8%. The annual growth last year was 3.5%. In terms of demands, our asset price grew slowly, so private consumption improved. In terms of investment, we saw growth as well. In terms of our exports, we did quite well. As mentioned, there was good sales of tech products, so our service trade also performed well. Last year, our IPO did well, and overall speaking, the equity market recorded a growth of 28%. On the right-hand side, it shows the private sector sentiment. The purple line shows the PMI, and it grew for 5 months in a row. As for the consumer confidence index, it remained steady and it improved compared to the year before. As for the Hong Kong dollar exchange rate, it remains in the comfortability zone, and the rate stood at about 7.8, and there was just a small fluctuation. As for Hong Kong dollar interest rates under the LERS, our interest rate followed the US rate. But we also have to look at the supply and demand of capital. In November last year, with the capital needs because of the equity share market, we saw some drop, but then it rebounded. The interest rate stands at about 3%. As for bank deposits, there was a growth of 11.8% throughout the entire year last year. As for housing prices, with the drop of interest rates as well as the good performance of the equity share market, so starting from Q2 last year, we saw slow increase of housing prices. For the entire year last year, there was an increase of 3.3% in terms of housing prices, and various real estate indexes showed that housing prices increased by 1.6%. We had 62,800 transactions for the entire last year, up 18.3% compared to the previous year. Transactions were more in the second-hand market compared to the first-hand market. And we see that transactions will continue to increase. We see that sales of first-hand properties have been doing quite well, and the second-hand market is quite active too. Now, looking ahead to 2026, there are still uncertainties in the external market. We have to pay attention to the pace of interest rate cuts of the U.S. Federal Reserve. Geopolitical landscape is still uncertain. As for the Asia-Pacific region, benefiting from AI development as well as the needs for tech products, the exports should do well. And under the 15th Five-Year Plan, we believe that our country will steadily advance high-quality development. We believe that the economy in Hong Kong will grow steadily. As mentioned just now, we will proactively dovetail with the national development strategies. We will talk about our work on internationalizing RMB later on. We will continue to monitor the market closely to maintain currency stability in Hong Kong. I'll now give the floor to Arthur. Mr. Arthur Yun, I will quickly talk about the banking sector performance. Over the past year, we saw a shrinking growth in terms of loans, but then there was a high demand in terms of loans, and for the entire year we see an increasing or an upward trend for total loans. For both total loans as well as financing loans, there is a moderate growth. People are more concerned about the quality of credit risks. The classified loan ratio has been growing very slowly over the past few years. It stands at about 2%. Q2 last year, the classified loan ratio stood at 1.96%, and in Q3, it stood at 1.9%, so there was a moderate increase. We're still compiling the figures for the end of year last year, but then the figure shouldn't deviate too much from this. We see that there is still a great challenge. This is because it has to do with real estate property projects. For both loan projects in Hong Kong as well as those in the mainland China, there is pressure. So we will work with the sector to manage credit risks. But overall speaking, the risks are under control. This is because the coverage of banks is still high. If you do not take into consideration the collateralized loans, the coverage rate is 65%. Just now, Mr. Eddie Yu said that the economic growth performed well last year. We continue to reach out to SMEs. We know that for certain trades, they are still coping with a tough operating environment. While the economic growth trend is doing well, we still hope that the banking sector will continue to support the operation of SMEs. About 1.5 years ago, we set up the task force on SME financing. We have been doing a lot of work to support the capital needs of SMEs. We have recently held a meeting and we have discussed the scope of our work for this year. We will continue to provide capital support, and we will also give support for SMEs so that they can upgrade and transform themselves. For example, we will conduct visits for them, and we will also provide capital so that they can achieve digital transformation. This is what we're going to do in the coming year. Also, in the previous panel meeting, we mentioned that we will focus on IP financing this year. It doesn't amount to a great share of the market, but last October, the CEDB as well as the banking sector and HKMA together launched the IP financing sandbox. We hope that through the sandbox regime, we could accumulate experience so that we can build an IP financing ecosystem in Hong Kong.
不幸地舊年
In late November, there was the unfortunate event of the blaze in Tai Po. Together with the sector, we wanted to roll out measures to support families affected by the fire. We introduced a total of 11 measures instantly. I'm not going into details about them. Low interest rate loans, extension of loan deadlines, these have been implemented. Services were also provided to the affected families to help them to get a hold of the bank account information about the deceased. Coordination efforts have been underway. We want to provide immediate services to the bereaved families. I understand people are interested in fraud prevention. In the interest of time, I'm not going to expand on every aspect of fraud prevention. Moving on to legislative proposals under the banking ordinance. As we said, we would make legislative amendments. We would make the Banking Legislation Miscellaneous Amendments Bill. In May this year, we will come back to the Council to take members through the main purpose of the legislative amendment exercise. In the interest of time, I'm not going to go into details about the amendments, but I can address particular concerns over individual areas. Thank you. I now give the floor to my colleague. Thank you. I will now move on to an overview of renminbi offshore market. The offshore renminbi business in Hong Kong has been doing quite well. In the past 2 to 3 years, trade financing went up by 50%, dim sum bonds increased as well. The momentum is very good. The overall interest rate of renminbi is on the low side. There is also the policy of going global. All these lend help to the offshore renminbi business development. Now, these are the key developments of offshore renminbi business in Hong Kong. We want to tie in with national strategies and development. We want to enhance the influence and impact of the renminbi business market. And at the same time, we want to boost the market. We do so on different fronts. One, we enhance liquidity. Recently, we offered a renminbi 200 billion renminbi business facility to enhance the impact and influence of renminbi. We want Hong Kong as well as other offshore markets to make better use of renminbi to make investments. On product development, it plays a key role. There are Bond Connect schemes. There are also Swap Connect schemes. We also work to strengthen financial infrastructure. CMU is an important measure. We promote sustainable development. We also render continuous support to the real economy and enhance outreach. We work with the sector to expand the overseas markets. On to the next slide. It details our cooperation with the mainland. Regarding the northbound Bond Connect, we have started the repurchase and cross-boundary repo business using northbound Bond Connect scheme. Regarding the southbound Bond Connect, we have expanded investor scope to cover more types of non-bank financial institutions, so investors can buy a wider array of bonds. Regarding Swap Connect, there's been expansion in this area. Regarding the WMC, that is a Wealth Management Connect, we have been rolling out different measures. The aim is to enhance the sales and promotion services under Wealth Management Connect 2.0. We have also enhanced our efforts in helping mainland enterprises to go global. We want to help more mainland enterprises to set up centers in Hong Kong, that is the Corporate Treasury Center, CTC. We are studying enhancements to the tax arrangements applicable to CTCs together with government agencies with the target to complete the study within the first half of 2026. In parallel, we will enhance promotion. Regarding the digitalization of trade and related financing business, we are working with the government in consulting the industry on the proposed legislative amendments to facilitate digitalization of trade documents. We aim to submit the suggested amendments to LegCo within 2026. There is also the Project Cargo X, 20 recommendations under which have been made to modernize our trade finance ecosystem. Together, we promote the going global of businesses. Developing the bond market is an important measure. Hong Kong remains a key leader in bond arranging hub in the region. We have already launched a roadmap. We want to take forward the development of the local bond market. There are four main areas: 1. Promoting primary market issuance; 2. Enhancing secondary market liquidity; 3. Expanding offshore renminbi business; and 4. Facilitating innovation in fixed income market infrastructure. These are the four main areas under the roadmap. As regards developing Hong Kong's financial platform, we first start with green finance. We announced last week the Green Sustainable Finance Cross-Agency Steering Group's 2026-28 priorities. We'll continue to hold the 2026 Hong Kong Green Week. When it comes to stablecoins, we are pressing ahead with the licensing process under the Stablecoin Ordinance. We seek to issue the first batch of licenses in the near future. We continue to work on outreach. That concludes my introduction. Next, Mr. Howard Lee, Deputy Chief Executive. Thank you. Now I'm going to speak on financial infrastructure. Well, financial infrastructure is mainly used by financial institutions. For members of the public, we use, for example, the faster payment system, FPS. This is the closest contact we have with financial infrastructure. We serve almost all financial institutions in Hong Kong. The security and stability of financial infrastructure are key. It is good that financial infrastructure stays invisible. That is because then we have no issues identified. Regarding Central Money Markets Unit, that is CMU, it has undergone development. It has become a larger platform for Bond Connect or dim sum bonds. These are taking place on this platform. There is an opportunity for us to foster further development. Regarding Cargo X, it has received much attention recently. Under CDI, that is Commercial Data Interchange, Project Cargo X has undergone expansion. We aim to provide a better information platform for the logistics industry. We want to improve the dissemination and sharing of information. The CEDB, the TLB, and the Airport Authority have joined us. We want to provide a more comprehensive commercial data interchange. We aim to enhance efficiency ultimately. Regarding financial infrastructure, we have some fintech initiatives. Fintech 2030 has been launched. It focuses on 4 strategic pillars with the acronym DARTS. I'm not going into details about Fintech 2030, but there are also more projects. For example, under tokenization, we have Project Ensemble. It was launched last year. Under conceptual implementation, we have added TX to the project title. That is to reflect the fact that it enables real value transactions involving tokenized deposits. We want to lay the foundation for a better financial infrastructure. Regarding Project eHong Kong Dollars Plus, it focuses on the wholesale and retail levels. And right now we are working on the retail level. It has become an important element in Project Ensemble to provide better support to the transactions between banks and financial institutions. Let me move on to the investment performance of the exchange fund after talking about financial infrastructure. Last week, we held a press conference. We announced the overall investment performance of the exchange fund last year. It was subject to the fluctuations over the past year in the financial market. National debts are a major area. The Hong Kong MA plays a very important role. It needs to support the stability of the Hong Kong dollars. We invest in a lot of different products. Some have high liquidity, some are of high quality, whereas for the sovereign bond of the US, the yields and returns have quite a lot of impact on us. Let us take a look at the bond yield rates. Comparing with 6 to 7 years ago, the US interest rate is on the high side now. In the past 12 years, especially for the US debts, it has shown a steady decline. This lends support to our investments. If the US interest rate saw a downward trend, then we will stand to benefit. Most markets around the world show an upward trend, whereas for the Hong Kong market in the past year or even 2 years, we have been faring quite well. We have benefited from the upward trajectory of the international markets. We have seen depreciation in relation to the USD. The greenback broadly weakened against major currencies. The Hong Kong dollar is pegged to the greenback. When foreign currencies appreciate, then foreign currency are more expensive for us. That's why when the US dollar weakens, then we stand to benefit. This is the investment income. In 2025, the investment income stood at $331 billion. In different areas, that is, as you can see on the leftmost column, we see different areas and all the figures are in the positive. We have recorded the highest investment income. As Mr. Eddie Yu said, this figure was subject to a range of good factors. All these areas showed an upward trend, which is actually quite rare. Government reserve has been put in our exchange fund. In the past 6 months, in the past 6 years, we take into account the principle of the government reserve, and we paid $16.5 billion to the government and $14.7 billion to other statutory bodies of the government.
If you look at the exchange fund, the investment return is different from other kinds of funds because we attach importance to the liquidity. Our goal is to first make sure that we keep the principal investment. So this chart shows our investment return since 1994, and the average return rate stands at 4.6%. We've seen an inflation growth of 2%, and our view is that we have reached our goal in terms of the long-term growth of the investment return, and the investment return last year reached 8%, and this is at a rather high level. And this has to do with our investment portfolio. Our portfolio restricts the investment return amount. As for the other kinds of investment, the portfolio is more flexible. If we do not only focus on certain types of U.S. bonds, then we could actually reach 12% in terms of the investment return. Lastly, I'd like to talk about the services provided by the Hong Kong Mortgage Corporation, which include elderly mortgage as well as mortgage insurance. As for the SME financing services, these are also provided by the Hong Kong Mortgage Corporation Limited. It is responsible for working with banks as well as implementing the programs. It offers support to those who procure properties as well as the SMEs that need financing solutions. It has provided financial support to all these sectors. So I'm not going to go into the details here. If need be, I will provide more information. Thank you. We now open the floor for questions. For those who would like to speak, please press the request to speak button. Based on the number of members who have pressed the request to speak button, I will give 4 minutes to each member. Please leave enough time for the administration for the HKMA to respond to your questions. I'll read out the lineup: Mr. Sunny Tan, Dr. Johnny Mr. Ronald Chan, Ms. Carmen Khan, Deputy Chair Mr. Rock Chen, Mr. Michael Ngai, Mr. Duncan Chu, Mr. Nick Chen, Mr. Ray Wong, Mr. Alan Chen, and Mr. Albert Chuang. Mr. Sunny Tan, please. Thank you, Chair. First, congratulations to the HKMA. Last year, the performance for the entire year was quite good. In the PowerPoint presentation just now, there was mention about helping enterprises to go global. We often compare our performance with the previous year to see how we can do better in the future. In terms of exports as well as high-quality development of our country, I think we are seeing much difference in terms of the scale and growth. I am concerned about 2 things. First, in terms of our preparation for a large-scale development, what can we do in this regard? Some say that the momentum is very good, but what can we do to cope with potential risks? Also, if there's anything wrong with the bond market in the Western countries, we'll have to cope with the potential risks. We need infrastructure as well as manpower to cope with such potential challenges. We always hear that hundreds of companies are waiting to get listed. So in terms of our preparatory work, how can we better manage risks as well as to cope with the development trend? Mr. Yu. If there are great changes in the global market, we will have to pay attention to the flow of capital. If there is any inflow or outflow of capital, we are actually quite prepared for this kind of situation because there's been free flow of capital in Hong Kong. We have been building our financial infrastructure as well as financial platforms. We have put in place some so-called spared cushions. If there is a huge influx of capital, our system could support that. Also, if there is great changes in the market, we have enough emergency response capability to respond to this kind of influx or outflow of capital. We have different financial platforms. For example, we have the currency market as well as the bond market. As for the equity share market, it is overseen by the Hong Kong Stock Exchange. As for our financial market, there is much coordination among the financial institutions as well as the regulators in Hong Kong. So please rest assured we have already done a lot of preparatory work. There have been great changes in the global market. If we are not doing enough, we will certainly do more to prepare for any potential changes. Next, Dr. Johnny Ng. I have 3 questions. First of all, congratulations. Last year as well as over the past 3 years, the exchange fund has been doing quite well. There is some $700 billion and some $10 billion are going back to the public coffers. So the economy in Hong Kong has been doing quite well. There should be some surplus, but the government still needs to issue bonds to build infrastructure. There is cost to issuing bonds. There is also interest rate. Will the HKMA take this into consideration? Will some more returns go back to the public coffers from the exchange fund so as to lower the cost for taxpayers? Also, I'd like to turn to the SME financing scheme. During COVID, what was the bad debt ratio? Also, since the economy has rebounded, will the bad debt ratio drop? Now, this is a more technical question. Earlier, there was the FinTech 2030 summit. I learned from the news that there should be quantum key distribution. Does the HKMA have the capability to support that? HKMA. There is a standing mechanism in place. That is, we look at the investment return over the past 6 years to distribute the return, or we use the exchange fund bill over the past 3 years to determine the amount of money that should be distributed to the public office. To give you an example, in 2022, there was a loss in terms of our exchange fund investment. But that year, we continue with the income sharing mechanism, and the public coffers got about $50 billion. Even if there is a loss, we continue to distribute the investment return to the government. This mechanism has been in place for years, and I don't think there is a need for us to change that. As for capital investment, as well as other kinds of investment, should there be more income going back to the public coffers, it is decided by the Financial Secretary. Also, under the Exchange Fund Ordinance, Article 8 stipulates that the FS can consult the CE in Council as well as the other advisory committee to decide whether more income should go to the public coffers. But this has to be done under the premise that it will not affect the current stability of Hong Kong. We have to maintain the stability of Hong Kong dollar if we make any changes. I believe the FS will give an all-round consideration. Now on the post-quantum cryptography, it is true that banks carry out their own studies on new technologies. We raise this technology because we know that some large-scale banks around the world have already kick-started the studies, and we want to make the first step now. We are now formulating a 2030 development blueprint. The blueprint helps implement the vision set out in FinTech 2030. And one of the areas that we're going to work on is post-quantum cryptography. We're not only going to work with the banking sector, we'll also work with professional institutes, including the academia, to carry out the relevant studies. Any follow-up questions? Oh, to supplement. Just now, there was mentioned about the financing scheme. You are right that there is a bad debt ratio, but the bad debt ratio has slowed down. Take Q4 as an example. The bad debt ratio stood at 18.67%, up 0.5 to 0.6% compared to the previous quarter. There was a period in which there was a growth of over 3% in 1 month, but we believe that this trend will not go on. Next, Mr. Ronick Chen. To prevent people from suffering from monetary losses in deceptions, a lot of banks last year rolled out Money Safe. I noticed from the statistics that clients belong to the age group of 25 to 59 years old. For those aged 60 or above, they account for a smaller percentage. Well, this is different from what I understand. I've talked to a lot of elderly people in the community, and many elderly people are interested in this Money Safe scheme, but maybe they are not aware of the details of the scheme. How will the HKMA expand its publicity campaign on Money Safe so that the usage rate in the elderly group can increase? My second question has to do with Swap Connect. The Central Bank of China in last September rolled out some enhancement measures. As at the end of last year, northbound Swap Connect account for about 500 billion RMB, involving 885 transactions. The People's Bank of China said they would carry on with the arrangement. Will the HKMA expand the investor group? Also, will there be southbound Swap Connect to improve the two-way channel? Lastly, on Wealth Management Connect, after the launch of the 2.0 version, the sector is looking forward to a 3.0 version. The tripartite online conference is conducive to the market, but will there be a new arrangement? And will the scope be expanded to Beijing and Shanghai? Also, will the investment amount be increased to $8 million? Also, for gold as well as metal and physical commodity, will they be included under the scheme? Thank you.
Thank you. I will first take the third question regarding the WMC. There were improvements last year. We talked about the process of the WMC. We will review with the banking sector to see in what areas we need to make further improvements. We have been in talks with the banking sector. Regarding what Mr. Chen said just now, We have been exploring the best time, and we will continue to work on this with the banking sector. Regarding money safe, we know we need more publicity efforts to promote to seniors. It was fully launched at the end of last year, and we will be working with more NGOs, and we will also mount more publicity programs in specific environments. MoneySave doesn't just target seniors. We are worried about this misconception. It is not just seniors that are scammed in the community. You shouldn't assume that you will not fall victim to scams. If members are unclear, please get in touch with us. We are happy to take you through using MoneySave. Regarding Swap Connect, as Mr. Chen just now mentioned, we have actually made updates recently. Regarding these improvements and enhancements, this is an ongoing process. We are willing to discuss with the Chinese mainland in enriching the variety of products, taking into account the latest market situation. Regarding southbound Swap Connect, this is actually part of our plan, but we will have to see if there is demand in the market. This will give rise to a greater demand for risk management. Regarding the southbound Connect scheme, we will keep in view the market demand, and we will also be keeping in talks with the mainland units. Thank you. Ms. Carmen Khan. Well, I'm not a senior citizen, but I do use MoneySave as well. I'd like to ask about risk management. I have to commend the Hong Kong MA. The banking ordinance was amended last year. The information sharing mechanism was improved. With these amendments, the banking sector will find it easier to share and disseminate information. This will also be conducive to clamping down on cross-boundary scams. For authorized transactions, there's a framework on scams resulting from this type of transactions. We need to strike a balance between protecting banks and customers. I know HCAP has been consulted. We do need to strike a balance. We understand the banking sector operates with high risks. I'm glad to see that the loan loss provision coverage ratio has improved. Right now, the percentage stands at 1.98%, whereas the ratio in 1999 peaked at 7.43%. I believe financial infrastructure is yielding better results, not just on bonds, but we are also talking about post-trading services in the equity market. There's a roadmap co-developed by the SFC on the secondary bond market regarding the development of offshore renminbi. $200 billion are being used by the banking sector. Well, I mean, is it beneficial for the banking sector? Have you gauged the effectiveness? Hong Kong MA. Thank you for the sharing of information among banks, the effectiveness has been quite good. Since the amended ordinance came into effect last November, we saw a number of banks taking part in the in the scheme. We expect to cover even more banks, about 28 banks. Some suspicious transactions were successfully intercepted. I thank the last term of the government for approving the amended ordinance. The ordinance was passed by the last term of the council very swiftly. Just now, Ms. Carmen Khan talked about a framework, which we have already consulted the industry. When frauds transpire, how do we deal with the responsibility of the scams? Well, rest assured, we'll definitely strike a balance. The landscape is complicated. It's very complex, and we need to take into account a range of factors so that we can handle different cases with balanced stock. Any more to add? Regarding the renminbi business, yes. Well, when we first launched it, the figure was $100 billion. When it was open for application, the figures actually way surpassed this one. We have reached an agreement with the banking sector, and the amount could further increase to $200 billion. There is a call from the banking sector to increase the amount. The pre-approved amount has already been used up. There are some more banks that would like to take part in the scheme. We can see that the cost and the stability of the scheme are quite good. The period used to be just 3 months. However, we now can see that the periods have been extended to 6 months or even a year. This initiative has benefited the Hong Kong environment. And we can see the expansion to the Middle East as well as other areas in the world. The result has been quite good, but we'll definitely work harder. Well, I need to declare I serve in a bank. The figure is about $800 billion, and I believe that the Hong Kong MA should take into account the actual circumstances and make changes if possible. Last June, the initiative was launched. That is the Cross-Boundary Credit Referencing, CBCR. Will the Hong Kong MA consider working with the Chinese mainland? Is it possible to expand the application scenarios? Will you provide it at the institution-to-institution level? The bond scheme third generation was launched. Will you consider regularizing the scheme? Will you also invite the participation of the private sector? Well, you can also consider enriching the range of products, not just bonds. The stablecoins ordinance has been passed. There is a global competition for stablecoin products. The US, Singapore, Dubai. What about our competition with these areas? Definitely we need to keep the risks in check. We also need to move forward in a stable manner. We cannot afford lagging behind other financial markets. We need to proceed in a robust manner. Hong Kong MA, thank you. Regarding the Cross-Boundary Payment Connect, we are working on expanding the Connect scheme with the Chinese mainland. Deputy Chair is very clear about the scheme. More application scenarios, a higher amount, institution to institution, these are exactly our focuses. In our dialogues with the Chinese mainland, we take a cost-driven approach. We will take it step by step. We'll get done with the easiest part first. Afterwards, we'll move on to the more difficult part. Regarding the tokenized bonds issued, basically we have regularized the bonds and we are laying the groundwork for the next batch of issuance. Private organizations will also issue these bonds. We want to lead by example. We want to attract more business opportunities. When it comes to the range of products, the project ensemble doesn't just target bonds. We want to promote tokenization. Well, what about stablecoins? Well, regarding tokenized bonds, we want to attract the participation of the private sector. We have an ongoing scheme as well. As long as you meet certain criteria, we can provide support and subsidies. This scheme has been quite well received, and we look forward to providing more support. On the issue of stablecoins, just now we talked about other areas around the world. Regarding the implementation of the ordinance and the regulatory framework, we have already taken into account the latest development in other areas of the world. Above all, we need to strike a balance between implementation and risks. We need to allow the development of stablecoins in a better and controlled environment. Different central banks and regulatory organizations are mindful of the possible risks arising from stablecoins. First of all, we need to keep the risks in check. Only then can we foster a better development of stablecoins. Definitely, moving forward, we'll strike a good balance between these 2 points. Thank you. Next, Mr. Michael Ngai. Thank you, Chairman. I'd like to talk about promoting green finance and sustainable development. In 2021, the Green Finance Subsidy Scheme was launched by the Hong Kong MA. The results have been encouraging. Under the existing subsidy schemes, I'd like to know what kind of initiatives does the Hong Kong MA have? How can we foster the sustainable development without ongoing subsidies? That is the Green and Sustainable Finance Grant Scheme I just now talked about. With the opportunities of green finance, how can the MA promote the international green finance market and green bond? I hope that the Hong Kong MA can provide a clear roadmap with performance indicators. Thank you. Daryl? Thank you. Regarding the Green and Sustainable Finance Grant Scheme, we want it to operate on its own. We want to minimize our intervention. It is conducive to market development. We do conduct reviews from time to time. We consider providing new incentives. We used to only subsidize green bonds. The scope has been widened afterwards. In the process, we make appropriate adjustments. We stay dynamic in the adjustments we make regarding transactions. For second-hand turnover, it is not as buoyant. There isn't as much supply. Some investors buy the bonds and then they hold them. Oftentimes we talk about promoting the turnover in the second-hand market, and this is our work focus. Just now, you also referred to the Bond Connect. Mainland organizations can subscribe to green bonds. Among the green bonds issued by Hong Kong, there are quite many mainland investors. That includes green bonds issued on behalf of the government as well. Many of these investors come from the Chinese mainland, so we can see the effectiveness of green bonds. Thank you.
Mr. Duncan Chiu, thank you. I have 3 questions. The first 2 questions have to do with Cargo X. It's a good scheme because it helps enhance transparency of data as well as efficiency, and we can identify any irregularities early with this scheme. It also helps the SMEs with financing, but what is most important is that we need enough data. A lot of the data are stored on the platform. However, this scheme is mostly for first-hand users as well as banks. We noticed that intermediaries, including e-commerce traders, they have a lot of these trading data as well. For e-commerce traders as well as intermediaries, can they have a share of the data too? Second question is about Cargo X. A lot of the data is uploaded to the CDI. There will be the Corp ID version of the CDI. Just now we talked about cross-departmental efforts. How can we make sure that different government departments, including the IRD, could make use of the corporate ID to log into the CDI-related platforms such as Cargo X so as to promote digitalization? Lastly, about Hong Kong dollar. Just now there was mentioned that we should focus more on wholesale. There was B2B or G2G Hong Kong dollar wholesale activities. In Singapore, there was the purpose-bound market, and in Shenzhen, there was this use of the tool as well, and also during the national games. But are we not considering conducting retail testing? HKMA. I'll take the 3 questions. On Cargo X, we are not restricting the scheme to a certain number of databases or users. Cargo X together with the CDI, the vision behind is that we want to provide a platform for data users, and once you're connected to the platform, you can get access to all the data. Over the past few years, we have been trying to add different data users to the platform, including government departments as well as organizations in the private sector too. We welcome e-commerce traders to join the platform. We hope that we'll be able to build what we called a bazaar so that different users can, through this platform, benefit, be it data provider or data user. We hope that they can both benefit. As for the corporate ID of CDI, it's not rolled out yet. We hope that we can launch it by the end of this year. We, together with the Digital Policy Office, is working closely on this. For those who make use of the corporate ID, we want to make it easier for them. For example, we might ask commercial organizations and institutions to make use of the corporate ID in order to join the platform. So we are working with the government departments on this. As for the question about Hong Kong dollar, over the years we've been working on addressing the pain points. Once the challenges are cleared, we will be able to boost the usage rate. At the retail level, there aren't many pain points because there are different e-payment methods. We aren't sure whether we should roll out Hong Kong dollar at this point. This is because we have to review the various pain points. We are not of the view that we will not go ahead with the launch of Hong Kong dollar, but we'll have to address the challenges first. Next, Mr. Nick Chen. I have 2 questions. First, can the HKMA tell us more about the IP financing sandbox scheme? What is the progress? How many banks are taking part in the scheme? And how can we offer our support to help promote the sandbox regime? Second, about stable coins. At this point, I know that This is backed by the currency. It is not a commodity-linked stable coin. Is there a timetable for developing stable coins? Two questions. Now on IP financing, in December, we rolled out the sandbox regime. So far, 3 banks as well as 4 cases are now being tested under the sandbox project. In terms of the development of the ecosystem, there are many components involved, and in Hong Kong we have to work harder on this. For example, for valuation organizations in Hong Kong, we have none of these organizations, but there are such organizations in other places, so we have to think about how we can bring in relevant technologies to Hong Kong. Also, on legal arrangement as well as professional service arrangement and accounting service arrangement, we have to build these from scratch. Just by a few cases, we see that we have to work harder on several areas. We encourage banks to take part in the sandbox scheme, but first, banks will have to identify innovative enterprises which have the relevant IPs for financing. Then we will have enough cases or enterprises to build the ecosystem. We have just launched this for a month, and we think that it is good news that we already have a number of cases. We continue to encourage banks to take part in the sandbox regime. As for the timetable, we've got 36 applications so far. We're dealing with initial assessment as well as preliminary studies. We have almost completed this stage. We need some applicants to provide extra information depending on when the applicants are able to provide the supplementary information. We hope that by March we'll be able to make a decision and we'll be able to issue licenses. Our initial goal is to issue just a few licenses for stable coins. Again, we have to see how quickly the applicants can provide the supplementary information. It might end up taking longer. Next, Mr. Ray Wong. Thank you, Chair. I recognize the efforts of the HKMA in supporting SMEs. I thank them for that. According to the presentation, in 2025, the relevant measures have already benefited some SMEs involving $78 million, and the credit value is 1,842, and some $420 billion have been reserved for SMEs. So it shows the government's determination to support SMEs. However, I heard from members of the sector that they are still coping with challenges. According to statistics, in 2025, the overall loan growth is just 1%. That means there is a great pool of capital, but then the capital doesn't really channel to the front line. So I have a couple of suggestions. First, the industry sector is trying to achieve transformation. I hope that HKMA could help SMEs with procuring smart tech facilities as well as green equipment for their smart assembly lines. I hope the interest rates could be reduced to help them with the transformation. Second, with the principal moratorium arrangement, it is benefiting SMEs, but then it takes longer for the SMEs to resume the liquidity. I hope there could be more options for SMEs so that they could repay their debt successfully. Also, to respond to the point made by Mr. Duncan Chiu, in January, the HKMA announced the Cargo X report. There were 20 recommendations about CDI, and it has facilitated some $60 billion of loans. I hope that the HKMA could encourage banks to directly use data from the CDI so as to help banks conduct risk assessments. Some manufacturers, they do not have any properties for collaterals. So we need data. And this will also help the industry cope with the bottlenecks. Thank you. To respond to your questions about SMEs, I thank Mr. Wong for the useful suggestions. We will bring these suggestions to our dedicated task force to see if we can incorporate part of the suggestions into our work plan. Now I want to talk about the growth of credit. In 2025, we saw an overall increase. In the previous 3 years, credit growth shrank because in the mainland, the financing costs were lower, so a lot of people took out loans in the mainland. Last year, however, the cost for taking out loans dropped because the U.S. saw interest rate cuts. So the pressure was lower for those who wanted to take out loans. So these statistics are not reflecting that banks do not want to borrow money to the SMEs. We have a dedicated scheme because we want to make sure that banks are reserving enough capital to support the operation of SMEs, and this is going to be one of the focuses of our work this year too. As for the principal moratorium arrangement, it was for loans that were taken out, but the suggestions made by Mr. Ray Wong is targeting new loans. Yes, please be brief. In terms of how we can make use of data to encourage enterprises to use other assets instead of properties as collaterals, I want to mention one point. With the data available, we have to let banks know how to make use of data and how they can make use of the data to conduct risk assessment. Now we're working with banks as well as third-party service providers to see how they can boost their capacity. Now 5 more members are waiting to speak for the first round and 1 member is waiting to speak for the second round. After all these members have spoken, I'll have to draw a line. Next, Mr. Alan Chen. Thank you, Chair. I care deeply about how Hong Kong can surpass London in terms of our status as an international financial center. London Metal is ranked the top in the world. Hong Kong, however, is the biggest offshore RMB center. But our RMB loan market cannot catch up with that in London. I have 3 questions. First, how can we further expand the offshore RMB capital pool in Hong Kong? I appreciate that the amount has already doubled from $100 billion to $200 billion. My second question, how can we enhance dim sum bonds? We know that the Asian Investment Bank has already set up an office in Hong Kong. Is it possible to have the loan denominated in RMB? Now the amount stands at about $10 billion US. Also, how can we issue RMB denominated bonds in Hong Kong? We know that for the Belt and Road projects, the financing amount already reaches 1 trillion RMB. How can we encourage those countries to issue dim sum bonds in Hong Kong? Thirdly, using Shanghai as the cross-boundary RMB denominated loan application. We know that in 2026, some SMEs are already benefiting from the facilitation measures. Also, how can we boost the income of local banks? How can more RMB capital flow to local banks? Thank you.
Thank you. Daryl? Thank you, Mr. Chen, for your questions. Regarding the loan market of renminbi, we can see that in the past few years, there has been a considerable growth. From 2022 to 2025, we could see a fourfold growth. There is a demand in the market. That's why the banking sector has the incentive to do so. As regards the capital pool, in addition to the bank reserves, we need to take a more macro perspective. It's not just about liquidity, but for the onshore market, it can also enhance liquidity. It depends on the swap connect with the People's Bank of China. One can enhance liquidity through the onshore market. We have been in talks with mainland regulators. We want to expand the range of channels. And that's about the capital pool. Regarding dim sum bonds, we have been working hard to promote it. The AIIB is also involved. We want more financing activities to take place in Hong Kong. In addition to the AIIB, we also want to attract more organizations to come to Hong Kong. The Indonesian government and the Central Asia countries are also coming Hong Kong for financing activities. Regarding the renminbi income of the banking sector, when we can issue more bonds, or when there are more bonds, I believe this will lead to an increase in the revenue of the bank in relation to the renminbi business, and we'll continue to explore the topic of renminbi. Next, Mr. Albert Wang. The exchange fund in 2025 recorded an all-time revenue standing at $331 billion, and the reserve stands at $936.1 billion. There's a twofold growth comparing with 2024. I'd like to ask about the plan of the Hong Kong MA. The gold price has gone up to a historic high. The policy address says that we need to develop ourselves into an international gold market. Will resources be added to dovetail with our policy of positioning? Thank you, Mr. Chong, for your questions. Regarding our work plan in 2026, as the Chief Executive just now mentioned, we have taken into account uncertainties and risks lying ahead. There are geopolitical tensions around the world. The trajectory of the U.S. rates is not very clear either. We need to diversify our risks. We need to consider our asset allocation. The exchange fund, we may lose $10 billion this year, but then we may earn another $10 billion next year. That is subject to change. We don't put all our eggs in one basket. The risks are just too high. That's why asset allocation is very important. We need to guard against any significant risks and changes. But we don't put all of our eggs in one basket. Regarding gold, we have been looking into gold. We have a very small amount of physical gold. We have some physical products as well, but then the amount is on the low side. Gold has received much attention because of the strong growth and increase in the past years. But the drop in gold was staggering, more so for the silver market. The price is subject to change. So for a company, you can be either in the red or in the black. However, the gold is subject to changes in the market. It's subject to considerable changes. It's in a state of flux. It is not a wise move to hold a lot of gold. Rumor has it that the Central People's Bank, the People's Bank of China there are some individual investors buying gold. We will keep in view the situation, but we don't hold a lot of gold. There are both macro questions and micro questions. Some members refer to stable coins. They expressed concerns. How can we keep the stablecoin system robust? Some people think this is a type of speculation. In the Chinese mainland, there is some official news. Some people ask whether we still want to develop ourselves into an international financial center. What about Web 3.0? How can we disseminate information in a more pragmatic manner? How can we keep the public in line with what we think? Regarding licensing arrangements, the arrangements aren't beneficial for organizations from the Chinese mainland. You said that you would draw reference from international organizations, so national experience may not be taken into account. As for ECAI licenses, can the eligibility criteria be further relaxed? There are money mule accounts and reports regarding financial institutions. Is it possible for you to enhance cooperation and dialogue with the Chinese mainland? Will you share information with the Chinese mainland more often? There will be fewer scams if there is an exchange mechanism between the Chinese mainland. Hong Kong MA? Well, I will first talk about stable coins. Chairman, you are correct. We definitely need to expand our community outreach when it comes to stable coins. Some people lump stable coins and other virtual assets together, but they are quite different. Some are more speculative products. They are digital assets, whereas for stable coins, they are used as a payment tool on some particular platforms. That's why we need to explain the differences between them to the public. Regarding the stablecoin framework, it must align with the international standard. There is a global consensus. We need to go with the same framework. Singapore, Switzerland, the UK, they are preparing for the publication or the framework. We must take risks into account. We must stay robust. AML matters. We put quite a lot of resources into AML. We want our first step to be robust. We don't have an international standard to go with. We have two standards. We take into account your credit rating. We take into account your history, and we check whether the figures tally with one another. If the result is trustworthy, then your figures should tally. That's why we don't have a breakdown. Any organization coming to us, if they want to apply for the results, we see whether the results are trustworthy. If the criteria are acceptable by the ECAI, then we accept it. The first one isn't a subjective criterion, it's an objective one. That's why there is no hard and fast rule on whether the institution is from the Chinese mainland. On the abuse of accounts, we want to keep local data. After legislative amendments, the dissemination and sharing of information among banks has improved. After we have consolidated the data and figures, then they can be passed on to the law enforcement agencies to take follow-up actions. Thank you. Mr. Lee Kuang Yu, I'd like to ask about Project Cargo X. Just now, the Hong Kong MA talked about local cooperation. What about international data cooperation? This should be your core strategy as well. My first question is, between Hong Kong mainland and the ASEAN countries, is there any mutual recognition mechanism? Only then can we foster a regular mutual recognition mechanism. What is our next step for trade financing? We are working with SWIFT and ICC. When will we sign MOUs? Do we have a timeline, any timetable that you can share with us? Thank you. Howard. Thank you, Mr. Lee. For data and figures, the more comprehensive, the better. Of course, we want to cover data in Hong Kong and those from the Chinese mainland as well. We are working on consolidating the figures from the two places. Whenever cross-boundary flow is involved, there are more concerns. More is involved. For trade, there is a re-export. There are quite many issues that we need to work on, and I hope to see developments positive developments in the future, but please bear with us. We're looking forward to developments as well. As for SWIFT and ICC, they participate in the Cargo X. Do we need to sign MOU? Well, for ICC, they have data taxonomy. When we use it, we don't necessarily need an MOU. They welcome our participation. So a simple answer, for cooperation, yes, this has been ongoing, and we look forward to deepening our collaboration as well. Regarding the signing of MOU, we don't need to sign MOU necessarily for all types of cooperation. Thank you.
Last member, Mr. Holden Chow. Thank you, Chair. I have two questions. I noticed from the presentation of the HKMA that there were more property transactions last year. I remember about 2 years ago, there was a petition from the central authorities about Property Connect. Some mainland people, if they come to Hong Kong, they need accommodation. Back then, there was suggestions about relaxing the restrictions for mainlanders to come and purchase properties. I want to know if there is any progress in this regard in relation to the communication between the HKMA and the government. Also, will the capital brought by mainlanders only be restricted to purchasing properties? Will the banks be able to relax the relevant restrictions? I want to learn about the relevant progress of your work. Also, turning to Ensemble. I welcome the expansion of the Ensemble project. I understand that you have to do it step by step, but at the end of the day, well, with reference to the practices in other countries, we hope that people could make use of tokenization for their mortgage as well as purchase of properties. This is the global trend. I want to know if the HKMA has any rough timetable in terms of promoting tokenization. After all, we hope that citizens can have their assets tokenized. HKMA. In terms of Property Connect, we are aware of this suggestion. The mainland authorities are looking into this. There is capital control in the mainland, so when they consider this, they tread very carefully. On the Ensemble project, I will defer to Howard. As mentioned, we welcome different types of assets for the Ensemble project. The SFC is also one of the members of Ensemble. For investment products, we want to make sure compliance as well as investor protection as we promote tokenization to bring convenience to citizens. On the market, we see that there are some tokenized currency funds. The risks borne by these funds are similar to other types of investment products. So these are rather simple. As for other kinds of financial assets that we have not seen tokenization before, we'll have to look at the risks. We might need more time to educate the public and to enhance transparency about that. We do not want people to flock to these kind of products because there are risks. As for mortgage, could it be tokenized as well? Well, we are working to look into this, and we might need a revised legal framework in order to promote this. But currently, we have no plans to take forward this. I thank the HKMA for attending this item. Now we move on to agenda item 4. Budget of the Securities and Futures Commission for the financial year of 2026-2027. I first invite the government officials as well as representatives from the SFC to join us. Attending this item, we have Dr. Kelvin Wong, Chairman of the SFC. We also have Ms. Julia Leung, Chief Executive Officer of the SFC, as well as Mr. Francis Ho, Deputy Secretary for Financial Services and the Treasury. Welcome representatives from the FSTB as well as the SFC for attending this meeting. If you're ready, Dr. Kelvin Wong, please give us a presentation first. I want to leave more time for members to raise questions, so Dr. Wong, please be brief. Dr. Wong, ready when you are. Chairman, members of this panel, I am happy to take part in this meeting to brief members on the budget for the financial year 2026-27 of the SFC. This year is the inaugural year of the National 15th Five-Year Plan. It is also the beginning of a new legislative term. There will be a new landscape, and we together will work to promote the high-quality development of the International Financial Center of Hong Kong. Over the past year, we see volatility in the international global landscape, and also we have seen challenges in the global economy. With the volatile environment, the SFC continues to work in its own position to maintain the stability of the market and to protect the legitimate interests of investors. We work based on two core principles. First, we have to provide protection to investors, and second, we want to stimulate the development of the market. And with this dual approach in mind, we want to promote the stable development of the financial market. Over the past year, with stability of the market, we have taken forward a lot of work to continue to polish the brand of Hong Kong as an international financial center. We continue to attract investors to Hong Kong, and we leveraged our strengths in IPO as well as wealth management. We promoted digital asset fixed capital market as well as diversified development of the market. In the first 9 months of the financial year, the equity share market turnover was $334 billion, and this was up 70% compared to the $135 billion. Over the years, we had been trading prudently, so the deficit of $185 million was converted to a surplus. In the coming year, we'll continue to see risks. The SFC will, based on the circumstances, deploy strategies on the foundation of last year, we would continue to guard against risks. On one hand, we want to manage risks, and at the same time, we want to ensure the diversified development of the market to boost investors' confidence. According to internal statistics, in 2026-27, the average securities market turnover will be $256 billion per day, and the average futures options market will be about $250 billion per day. We believe that we will have about $4.9 billion of surplus. As at the end of 2025-26, we believe that the surplus would be about $109 million. This will provide stable financial support to us. There are high external uncertainties and risks. Any fluctuation in the equity share market would affect our income. We believe that the equity share market will continue to do well, but we will stay prudent and control expenditure as we draft our budget. Over the years, we have been able to balance the books, and the expenditure is usually lower than the estimated expenditure. The key is that we need our talents. We rely on our management as well as the professionals to make sure that our management and governance experience can be passed on to the next generation. Currently, we see fierce competition of talents in the legal service sector as well as fintech sector. The remuneration package continues to increase to draw for these talents. We have to make sure that we have the right talent working for us to make sure that we can be a regulator and to maintain our competitiveness. Therefore, we have to promote good remuneration package as well as a good career path to make sure that professional talents with international outlook can work for us. Over the past 3 financial years, there was a freeze in terms of our establishment. There was also a pay freeze. So we believe that in the coming year, we will only increase 18 posts, up 1.7%. Half of them will be directly helping us to promote the market. Considering that about 4% of pay rise is expected for the financial service sector, we are reserving 1.3% for pay rise and 1.5% pay rise that is linked to our staff performance. In terms of cutting costs, we have our strategies in place. We have purchased a long-term or permanent office space, and every year we're able to save $140 million. Deducting rent, we could save $60 million. And with the pay freeze, we saved a further $53 million. And we managed to save manpower costs by about $11 million too. At the same time, we have to make sure that by cutting costs, we won't be able to compromise our service quality, especially in areas of risk control as well as investment protection. We will, under the premise of managing risks, allocate enough resources on technology as well as data. We will save up money, but at the same time allocate resources to develop AI technology as well as digitalization to enhance our monitoring capacity. We want to, by doing this, boost investors' confidence as well as the quality of our service. Also, we need a healthy development plan. Without an inheritance plan, we won't be able to fulfill our undertaking. Therefore, talent will be the core of our management work. While we tread carefully and prudently, we will work with key stakeholders, including the SAR government as well as LegCo members. We will communicate closely to these parties to reinforce our status as an international financial center. Here, together with Ms. Julia Leung, Chief Executive Officer of TSFC, will take any questions from members. Now I'll open the floor for questions. 4 minutes, including questions and answers.
Mr. Chen Pui Leung, Mr. Ronick Chan, Mr. Holden Chow, Dr. Johnny Ng, Mr. Rock Chan, Deputy Chair, Ms. Carmen Khan, Mr. Nick Chan, Dr. Webster Ng, Mr. Ray Wong, and Mr. Alan Chan. The first member to speak, Mr. Chen Pui Leung, please. Thank you, Chairman. I'm glad to learn of the improvement in the market, hence the better performance in the finance of the SFC. They are asking for additional approval of funds. When it comes to property transactions and turnover, the SFC has a reserve of about $10 billion. About half of it is for fixed asset, that is property, whereas for the another half, liquid cash. The property transactions won't be completed until 2028. There is also a reserve of $100 million or so for the purchase of offices. According to your document, in 2027, the reserve will drop to $1 million. I'd like to ask why. You need to set aside $100 million every year. So how much fund do you still need to finish the purchase of all offices and properties? You are having a return of 4% of your investment. Is it a good idea to keep more cash, given the fact that the office market in Hong Kong isn't faring particularly well? You need to see whether it is a better idea to buy your own offices or to rent offices. Thank you. Thank you. I'd like to give the floor to Mr. Andrew Wan, Chief Financial Officer, to respond to your questions. Thank you. Regarding buying properties for offices, in late 2024, we purchased the properties. We bought a total of 12 floors. We are renting 9 floors at present. And we are going to buy 1 floor in the coming 3 years, 1 floor each. We take into account our internal demand, and we probably do not need to buy all floors in one go. We have used half of the mortgage loan to buy our offices. That is a total of 20 floors. After 9 floors, we are going to have a drawdown when we buy each one afterwards. Indeed, for the 12 floors, we have already committed to them. It's not just about buying or renting. There will be postponement regarding the time we get the floors in reality. We have a ring-fenced funds for properties, and we use these funds to buy the properties. And we didn't draw down our original fund. We have already struck a balance. Just now we talked about the reserve. Our reserve I mean, for the ring-fence property refers about $600 million or so. On the 31st of March 2027, the reserve will stand at $51 million. We will buy new properties and we will also pay off our mortgage earlier. We need to make sure we can reach our goal. We need to make sure we will pay the minimum interest rates. Thank you. Mr. Ronald Chen. Thank you, Chairman. The SFC hasn't applied for funding from the Legislative Council. I commend the performance of the management of the SFC. When it comes to governance, human resources matter. I'd like to ask some questions about manpower resources. First of all, for the strength and the establishment of the SFC, you have a total of 1,037 posts in your establishment, but then for the strength, you only have 985. There is still a significant gap between establishment and strength. Do you really need to keep all these vacancies? Or is it a better idea to budget based on your actual strength you need? You have an establishment of 1,037. If you do not need as many officers as you have in the establishment, why don't you cancel the posts in the establishment? That is just the same as the civil service approach. You have the pay rise of 3% and 1.5% related to performance. Regarding the 4% pay rise and the fact that SFC positions are well sought after in the market, can you keep it at low level? You said that you would upgrade 12 positions, and that's about $5.93 million for the upgrade of these positions, and that averages an increase of $41,000 per post. And you use the same grounds to upgrade high-rank positions. Some people are concerned, well, all these positions will be middle to senior management of the SFC. Then, is it heavier on the top of the hierarchy? Will you review the hierarchy of the Commission? Thank you. Let me give you a broad response, and then I will see if my colleague has other things to add. I'd like to ask Mr. Andrew Wan to give you a brief response afterwards. Overall, we have 1,037 positions, whereas our strength states at 985. The difference is 52 positions. 52 over 1,037, that is about 5% of all the positions. The Commission is led by the CEO, directors, board of directors. These are quite stable. The middle management is more subject to market fluctuations. The staff turnover is on the high side at around 6%. That's why if we keep the 5% vacancies, that will help us prepare for any sudden staff turnover. However, we have noted some position mismatch. For some positions, we cannot identify suitable talent. We want to keep our approach flexible. Regarding the extent of pay rise, we have already taken into account our finances. The financial sector has quite an ideal pay rise. We have already struck a balance between this factor and the development of the market. When we need to promote market development, the stability of our staff or our team matters. That's why we consider a basic requirement to increase the salary of our staff by 3% or 4%. The senior management of the Commission has a great sense of mission. Well, please try to be brief, Mr. Wong. I'd like to talk about the top-heavy hierarchy. Just now, Mr. Ronald Chen referred to the top-heavy structure. We enhance the functions of the higher management. As for those in the middle management or lower, we try to leverage on AI technology. In the interest of time, let's move on to the next member, Mr. Holden Chow. Thank you, Chairman. I'm glad to see the buoyant stock market, hence the increase in the revenue of the SFC. I believe this is exactly what we want to see. Earlier on, if you have already purchased or acquired your own property at a lower cost, if the property value increases in the future, then you will be able to save on the rental costs. That's understandable. I'd like to ask two questions. Earlier on, a lot of companies are waiting to get listed in Hong Kong. In the prospectus, we see a variation of quality among different prospectuses. They are of varying quality. As far as I understand, these prospectuses are compiled by third parties. They have been outsourced. They may not have a good idea of the company, but monitoring is vital. Does the SFC have further measures to ensure the quality of their prospectuses? For the local legal sector, there are many lawyers who are up to standard. We have law firms of different sizes, and they are fully competent to do so. I'd like to ask about ensuring the quality of these documents. Does the SFC have further measures? Another quick question. The stock market is buoyant, is doing very well. This is good. At the same time, we want the SFC to support the development of the market. You need to monitor the market, but also boost the market. Apart from the stock market, will you diversify the range of products in the market? Will you provide more choices for investors? We don't want to rely solely on the stock market. There are virtual assets, there are licenses, so how can you enrich the range of products? Thank you. I'd like to ask Julia, Chief Executive Officer, to take your questions. Thank you. Thank you for your questions. I'd like to talk about the documents required of going listed. We find that some documents are not up to scratch. That's why we attach importance to the issue of outsourcing. Here I'd like to appeal to companies. If you outsource your documents or your tasks to third-party service providers, Law firms need to ensure the quality of these documents. They need to act as gatekeepers. The local IPO market has keen competition. They will have to make sure they have sufficient manpower. Don't just go after high revenue. You need to make sure you have enough manpower. Here we require, when you engage professionals, you need to take into account whether they have sufficient experience and qualifications to carry out these duties. For the prospectuses and due diligence, the final responsibility rests not with the law firms, but with the guarantor. Apart from the stock market, we attach much importance to the market development of fixed income. We issued a roadmap. Second-hand market turnover, financial infrastructure development, these areas are covered. When it comes to V8, that is virtual assets, we will protect investors. At the same time, we'll consider enabling more transactions. We need to align with the world. We will also provide more products. Thank you.
Next, Dr. Johnny Ng. Thank you, Chairman. I have one suggestion and two questions. First, on manpower. I know that the SFC can do so much to support Hong Kong to become an international financial center. Is no easy task. So my question is it enough to hire 18 more people? This is because the stock market is doing very well, the IPO market as well as VA market as well. So people are worried if there is enough manpower within the SFC to take forward all the work. Now there is a media report saying that there are non-compliant accounts used to subscribe investment products. There were also false documents used to open up stock account. I want to know if there are such cases. Also, on investors' education, the success of Hong Kong relies in the development of the market as well as protection for investors. In order to ensure long-term development, there was a very successful publicity campaign launched by the SFC recently. However, we see that there are cross-boundary investors that bought trusted products, and they say that they got scammed. In Hong Kong, do we have enough publicity to make sure that mainland investors, when they come to Hong Kong, they will not fall prey to any scams? I will ask Julia to respond to the questions, and then I will ask Mr. Paul Yun, Commission Secretary and Chief Governance Officer, to tell you about our anti-scam efforts. Ms. Lau. I thank Dr. Ng for the questions. Some media reports said that some securities traders in the mainland made use of fraudulent accounts to take part in IPO applications. On this, the SFC did conduct investigations and we took appropriate regulatory actions. Here, I would like to remind the sector, if there is such situation, it means that our licensed security traders, in terms of their anti-AML efforts as well as CFT efforts, is not adequate. There is room for improvement. There are requirements stating that if there is an overseas securities trader that wants to provide relevant services, it is responsible for carrying out due diligence check to make sure if the local securities traders have enough anti-AML capacity. If you accept a large amount of applications from overseas securities traders. You need to conduct due diligence. There were people who make use of false instruments to attract investors. Well, first, making use of false instruments is a crime already. So in this regard, we conducted a thematic check. The securities traders involved, they did not only make use of false instruments, they also were involved in money laundering. Not to mention the mistakes they made, they also were involved in operating unlicensed companies in the mainland. Now turning to our publicity efforts. On the Don't Be Sucker campaign, we target local investors. We put up ads in local housing estates as well as public transport interchange. Through the publicity campaign, we remind investors. For example, on WeChat, we transform the messages into ones that are suitable for mainland investors. And we are going to open a new account on Xiaohongshu. However, we have to go through some procedures in order to open up the account. We haven't been able to do that yet, but we are going to do so. Also, we know that some young students as well as mainland investors are living in Hong Kong. They come from the mainland, so we held talks in universities in Hong Kong to let students know what they have to be mindful of. Next, Mr. Rock Chen, I have a suggestion and a question. Just now, some members asked about the manpower situation of the SFC. I'm glad that the SFC are putting in place various measures to retain talents. On the other hand, I suggest that you make use of high-tech systems to support your work. For example, if you need resources and where necessary, I support that you allocate resources into developing your IT systems. Second, in relation to 18A and 18C in terms of the trades covered, we all know that the technology has been developing by leaps and bounds. So my question is, will you, together with this Hong Kong Stock Exchange, study what kind of trades will be covered under Section 18A and Section 18C so as to tie in with the rapid development of technology? Thank you. I'll ask Ms. Julia Learn to respond. I thank Mr. Rock Chen for the questions. On Sections 18A and 18C, which is the Hong Kong Stock Exchange Main Board listing rules, the rules have been very effective because we were able to attract many new applications over the past few years. We reach out to the trade all the time. 18A covers biotech, and second, 18C caters to specialized technology companies. In Chapters 18A and Chapter 18C, we also relaxed the confidential filing requirements. And again, this has been very popular among the trade. So we review from time to time the requirements we impose, and we look at whether we need to revise the rules to move with the times. So we welcome any suggestions or comments. I'd like to add one comment. We have regular communication with the Hong Kong Stock Exchange at the management level, and also between the chairmen, we have regular communication. We talk to each other about how to maintain the competitiveness of the financial market in Hong Kong. Of course, our discussion covers 18A and 18C as well as other considerations. At the end of the day, we hope that the SFC as well as the Hong Kong Stock Exchange could have sufficient analysis and cooperation with each other to make sure that we can further enhance the quality of the financial market in Hong Kong so that we can attract investors as well as in Hong Kong as well as investors overseas to make sure that we can maintain the sustainable development of the financial market in Hong Kong. Next, Ms. Carmen Khan. I have a question about regulation and the other question about development. I noticed that 12 of the staff to be hired are to deal with IPO applications as well as regulation of intermediaries. I noticed that on the 30th of January, the SFC published a notice on dealing with misconduct, on dealing with IPO applications. There were 120 IPO applications throughout the year last year, and 300 applications are pending. It is expected that there will be up to 200 applications this year. So one of the notices you issued covers sponsors. You asked that the relevant parties have to complete the review in 3 months. I think this is necessary. Also, it was mentioned that last September there was a roadmap that you formulated with the HKMA. I want to know about the division of work between the SFC and the HKMA, because there were a couple of initiatives covered under the roadmap. Also, you said that you will set up a dedicated task force on dealing with virtual asset investment. I will ask Ms. Julia Leung to respond. Thank you. Just now, the members asked about the circular that we issued, and the listing documents the document was issued to IPO sponsors, the 13 sponsors that received the letter. Are working on 433 cases. Currently, there are 600 cases on the market. Not all of these applications have reached the A1 stage, but about 400 of them has applied to get listed, and they account for about 70% of the market share. So the 13 sponsors cover basically the major applications, and one of the requirements is that they have to submit a report within 3 months' time, and we're going to conduct a spot check on their manpower. We also impose requirements, that is, for each sponsor, if there are over 6 principals, they'll have to explain why they need so many principals. So when they conduct the internal review, they could submit plans on the new resource distribution. Second, about fixed income and virtual asset markets. In terms of the work division, well, actually, we take forward a lot of the work with the HKMA. This includes encouraging more sovereign bonds or RMB denominated bonds to be issued in Hong Kong. In terms of the development of the secondary market, we want to develop a repo market. We are currently carrying out a feasibility studies on the infrastructure. We are also in talks with those who are interested in taking part in developing the relevant infrastructure. For example, we might want a digital bond transaction platform, and we're in talks with the HKMA about this.
It's almost time, Ms. Khan. Thematic review. Well, I support it. Thank you. Mr. Nick Chen, I have 3 questions. First of all, I'd like to thank the SFC for its services. Please continue to develop Hong Kong into an international financial center. $19.63 million should be spent on improving infrastructure. Well, will the SFC levy on digital asset transaction? Some non-lawyers are actually carrying out duties of lawyers. How will the SFC deal with it? When they submit forms, that is A1 forms, do they need to specify the time spent in Hong Kong as a local lawyer? Will you require them to set this out clearly in their application? Thank you. Thank you, Mr. Chen, for your questions. Many projects of the SFC are taken forward over a period of time. That's why you see some costs which are spent in the earlier stage of the implementation. I'm glad to see the members show concerns over resources for manpower as well as technology. As the CEO, Ms. Leung, just now mentioned, technologies play a very important role in fostering market development. Regarding the second and third questions, I'd like to ask my colleague to give you more information. Ms. Julia Leung, CEO, thank you. Regarding the transactions of virtual assets, will we levy them? The VATP is actually in a starting phase. There are not many transaction volumes. We need to take into account other jurisdictions. There aren't any levies in overseas jurisdictions. We need to stay connected with the world. That's why it is not appropriate to levy on virtual asset transactions. When the volume of such transactions increases in the future, we may consider it. Regarding non-lawyers practicing as lawyers, this phenomenon has been seen in the past few years. The responsibility actually lies with sponsors. If they outsource or engage local or mainland lawyers to carry out due diligence or provide professional legal advice, they do have the responsibility to make sure that they are lawyers or they are Hong Kong locally qualified lawyers. Under our ordinance, there is no stipulation that overseas lawyers shouldn't be engaged. The key is to ensure quality, and this is the responsibility of sponsors. As for the application for licenses number 6 as sponsors, we have tightened the regulations and the criteria. However, the regulation of accountants isn't under our purview, but I believe they attach a lot of importance to this matter as well. 4 members are waiting to speak, and after they speak, I will draw a line. Next member, Dr. Webster Ng. Thank you, Chairman. I have 2 questions. The first question is about transactions. Transaction volume surged comparing with the previous years. I understand this is due to the implementation of measures. The SFC will have a model. Will you consider incorporating it into your estimation? If the international financial or political landscape has any impact on us, That is, will you consider incorporating this factor into your estimation? Regarding the creation of 18 posts, the market is quite buoyant right now. I doubt whether it is sufficient. Just now, the CEO said that they would not consider levying on the transactions of VA virtual assets. I'm afraid that this would weigh on the development of the traditional financial market. Thank you. Thank you, Dr. Ng, for your questions. For the internal statistical model, we base it on historical data. There are no projections, in fact. However, Dr. Ng made a good point. Regarding our estimates, we are cautious. The reserve is $5.8 billion. That is about 20%. This is sufficient for the SFC to operate in the coming 2 years, even in the worst-case scenario. We have a total of 24 months to operate on our own to ensure the resilience and security of the market. But this is the worst-case scenario. Under our model, can we incorporate market fluctuations into the model? We'll study this issue later. For the second question, I'd like to ask Ms. Julia Leung to respond. Thank you, Dr. Ng. Regarding levies, will there be any impact on the traditional financial market? As for the development of the new technology market, we need to foster its development with the prerequisite for protecting the investors. So I don't believe it will subject to many changes. Next, Mr. Ray Wong. Thank you. The SFC has $1.49 billion of surplus. This is a very solid financial position. I hope that the SFC will render more support to the physical economy, in particular SMEs. Some industry players shared with me that the application processes are very long. They have orders, but then they lack capital. That's why they have missed out on a lot of opportunities. I suggest that a fast track should be provided for SMEs to go listed. Just now you mentioned 12 positions will be created for IPO search. I propose to have a green channel that is a fast-track channel for SMEs that meet the criteria. When risks are kept in check, there should be an expedited channel for them to make an application. This is exactly how they can grasp the opportunities in the market. The BPA has proposed streamlining the processes of getting listed in Hong Kong. I hope that the administration will target SMEs in Hong Kong applying to get listed for the first time in Hong Kong. There should be fee waivers for them. Concessions should be provided in order to ease the pressure on their cash flow. Thank you. Any response? Thank you. I will respond in brief and then I will give the floor to Ms. Leung. There was a surge in the market transactions. However, charges in the market are subject to market fluctuations. In 2026, we are affected by geopolitical tensions. We need to practice a cautious approach when it comes to using our finances. We expect a surplus in our budgets. We have never used more than we have. We have already taken into account investor education, financial education, anti-scam efforts. For example, the Don't Be a Sucker campaign. We have put in a lot of resources, including manpower resources, into these publicity efforts. We don't have a figure right now. However, many staff members in the SFC have maintained close liaison with the market. Much training has been conducted to explain the policies of the SFC. I'm also grateful to Mr. Robert Lee. He has got in touch with a lot of industry players, securities practitioners, so that we can share information swiftly with the industry. Ms. Lam, please be brief. Thank you. When we approve applications, especially for A1 applications, irrespective of the scale, we approve the applications using the same set of standards. The time taken will not be shortened because the enterprise is of a smaller scale. Within 40 days, we inform the applicant of the result of the application. Regarding the disclosure of information in their prospectuses, we discuss with the applicants. We attracted different enterprises to go listed in Hong Kong, and we try our very best to provide assistance. Next, Mr. Alan Chen. I support the acquisition of properties by the SFC. Properties will increase in value with the interest rate cut cycle. And I have to commend the SFC for the 4% reduction in its expenses. 400 companies are still waiting to get listed. There is immense pressure within the Commission. The SFC is monitoring its finances very well, and I have to commend Dr. Kevin Wong for sticking with the 3% pay rise. In the market, the pay rise is 4% on average, and the private sector has been poaching staff members in the SFC. The pay is supported by the public funds. 3% pay increase is reasonable. However, in the private sector, the bonuses are considerable. And I have heard that the private sector has been poaching staff members in the SFC. The Wealth Management Center manage a total of 2.7 trillion worth of assets. We have stocks, but we don't have bonds. That's why I support the going listed of bond funds. We need to enrich the variety of our products, but I'd like to know when this will happen. What is the expected scale regarding AH stocks? This year, 400 enterprises. There are some small companies in the Chinese mainland that want to go listed in Hong Kong, whether they are tech enterprises or not. For the mainland policy, they have a requirement, that is, those with a value of more than 10 billion RMB. Only a company with more than 10 billion RMB are allowed to go listed in Hong Kong. Dr. Kelvin Wong, thank you. Thank you for your support. I'd like to give the floor to Ms. Leung to respond. Thank you. We have already approved the first private equity fund. Regarding the timetable of going listed, when is a suitable time? We want to allow more bonds fund to be transacted in Hong Kong. If all private equity funds could be transacted in Hong Kong, there are certain risks. However, if private equity funds are to go listed, then investors have a choice to exit. At present, we are conducting consultation. There is a cap of 15%. We will conduct public consultation on whether this should be increased. In this case, if it were increased, then high-quality private equity fund could be incorporated as well. But the liquidity might not be that good if they were private equity fund. We could not allow repo every day. Regarding stock AH, according to the media, there is a minimum market value before they can go listed in Hong Kong. But as far as we are concerned, there is no such requirement or cap. Thank you.
即係最後一位，到我自己。
It's now my turn. I have 3 points of concern. First, I know that since 1993-1994, the SFC has been doing quite well in terms of its fiscal position. It hasn't requested for appropriation from the LegCo. Now that the market has become more active and buoyant, now with more income on the SFC's side, is it an appropriate time for you to review the charges and fees? For example, for licensing applications, license renewal applications, as well as all kinds of fees charged for listing applications, is there room for you to further lower the fees and charges? I understand that last year we were told that the compliance costs were high. If you could conduct a relevant review, it would be really helpful. For example, with the launch of FINI as well as paperless securities regime, your income may reduce. Also, just now some members talked about diversified development for futures and options. Some industry players said they would like the deposit arrangement to be reviewed to lower risks and costs. Now, We understand that the IPO market as well as the equity share market has been doing very well. However, some SMEs as well as retail investors, they are not really benefiting because of their low participation rate. For some retail investors, they only join the market when the stock increases. So the oversubscription situation is not really reflecting the real situation with real retail investors' behavior as well. Can you tell us your response? Yes. Since 1993, we have had a surplus, so most of the time we do not ask for funding approval from the LegCo. This does not really reflect the fluctuation of the market. We exercise prudence when we manage our fiscal reserves. On one hand, we want to make sure that there is regulations. Second, we strive to facilitate innovation on the market. On levies or fees and charges, of course, it will lower the appeal if we charge a high levy, but since 1993, commodity prices have been on the rise. Overall speaking, in response to your questions, I think it is worthwhile for us to conduct an internal review. We can't guarantee that after the internal review we will lower the levies. Instead, we haven't been increasing the levies for years. While we have no intention to increase the levies, I believe that we should conduct a review in this regard. I, together with the Chief Executive Officer, will look into this to see what is the overall cost for the industry players. I think this is a very good suggestion. Now I'll ask Ms. Leung to reply to the other questions. Chairman, you mentioned about the market of futures and derivatives. On whether we could extend the transaction time so that overnight there could be transactions too. Well, we have relevant plans to review this with the Hong Kong Stock Exchange so that transactions could take place overnight as well. As for deposit for different investment products, on this we are working with the Hong Kong Stock Exchange. For example, we look into how to allow people to use bonds as collaterals. Perhaps the haircut is already reduced, but perhaps in terms of the procedures, there is room for us to make sure that the process can go more smoothly. We support this idea, especially because we want to develop the fixed income market. As for oversubscription, well, last August, we together with the Hong Kong Stock Exchange proposed the Mechanism A and Mechanism B reform. The original intent is that we want to make sure that institutional investors can come up with a reasonable pricing so as to improve the pricing mechanism. Many issuers they allocate less resources to retail investors. Therefore, there are often situations with oversubscription. In this regard, we are in talks with the Hong Kong Stock Exchange. After this mechanism has run for a longer time, we will see how we can improve. Thank you. Thank you again for SFC to attend the item. Now we come to agenda item 5. Directorate staffing proposals in the Financial Services branch of the Financial Services and the Treasury Bureau and the Hong Kong Police Force. I'll now invite the government officials as well as representatives from the police force to join us.
OK， 好，咁我哋就歡迎財經事務及庫務局同埋香港警務。
Welcome representatives from the FSTB as well as the Hong Kong Police Force for attending this item. If you're ready, I will first invite Mr. Christopher Ho, Secretary for Financial Services and the Treasury, to give an opening remark. Please be brief so that we have enough time for members to raise questions. Over to you, Secretary. Chair, this paper seeks members' views on the following directorate staffing proposals. First, we propose to create 2 time-limited supernumerary directorate posts under the FSTB. The purpose is that we need to prepare for the Asia-Pacific Economic Cooperation APEC Finance Ministers Meeting 2026. Second proposal, we propose to make permanent 1 time-limited directorate post of Chief Superintendent of Police for sustaining our efforts in combating money laundering and terrorist financing. Now I'd like to tell you about the proposal of creating a post under the FSTB. As we all know, we have been preparing for the APEC Finance Ministers meeting. This is to facilitate any macroeconomic development. Our country, as the host of the 2026 APEC meeting, as well as the host of non-ministerial meeting, the central government earlier announced that it would ask the Hong Kong government to help host the finance minister meeting in Hong Kong in October this year. We will do our best to host the meeting so that we will show our status as an international financial center under one country, 2 systems. This is our first time holding this APEC meeting. And this will give a chance for finance ministers around the world to exchange views. At the same time, it will give us an opportunity to present the opportunities in Hong Kong, and this will help us leverage our advantages as an international financial center. This meeting will last for 3 days. 21 APEC finance ministers as well as high-level officials as well as observers, including international organizations, will attend this meeting. It is expected that around 500 visitors will come to Hong Kong for this series of meetings. The Hong Kong SAR government will be responsible for organizing the meetings, including providing the venue, hotel, accommodation, and transport arrangement and publicity. To host this high-level meeting, we need preliminary planning as well as effective execution. So we need a directorate staff to hold a steering committee to make sure that all the preparatory work will be done well. We suggest that an AO officer, staff grade B, to lead the event coordination team, and we suggest that a senior principal executive officer work as deputy head of the event coordination team. These will be 2 time-limited supernumerary directorate posts, and this will be valid until the 30th of November 2026. We have thought about whether we could have existing staff to take up the 2 positions. However, the 2 staff will have a very heavy workload to prepare for the hosting of the meetings. If we use existing staff to absorb the workload, it will not be too appropriate. Second proposal, we propose to make permanent 1 time limited directorate post of Chief Superintendent of Police for sustaining our efforts in combating money laundering and terrorist financing. Since 2021, we have created this post under the Hong Kong Police Force, under the leadership of the Chief Superintendent. We have achieved great results in terms of our anti-money laundering efforts. We have been able to meet international standards to reinforce our status as an international financial center. While we have yielded great results, we are seeing changes in terms of the international landscape. For example, there is rapid development of technologies, therefore there is also evolving tactics in terms of money laundering. Also, we see an increase in terms of the number of cross-boundary crimes. To cope with the above challenges, we suggest that we make this Chief Superintendent post permanent so that the Chief Superintendent can continue to lead the branch. In fact, 5 years ago when we came up with the staffing proposal, some members already suggested us to make this post permanent. If we get the approval from this panel, we will consult the ESC in March and then we will consult the FC in April. We welcome questions from members.
Thank you, Secretary. The floor is now open for members to ask questions. 4 minutes each member, questions and answers included. 3 members have pressed the button to request to speak: Dr. Johnny Ng, Ms. Carmen Kan, and Mr. Alan Chan. Dr. Johnny Ng. Thank you, Chairman. In principle, I support the proposals. APEC meeting is very important. We joined the APEC meeting as Hong Kong, China. This is an important event. That's why we need 2 high-ranking officials to be responsible for preparing for the meeting. These are 2 time-limited posts. The official will be responsible for managing and controlling the budget. Will internal resources be used? And I believe the official will work with different bureaus and departments. They need to tell the good stories of Hong Kong. Is it possible for this official to span different policy portfolios? Regarding the Financial Intelligence and Investigation Bureau, FIIB, there are more and more scam cases in Hong Kong. The total number is on the high side, despite a minor decrease recently. Comparing with serious offenses such as robbery, the case numbers are on the low side, but there is still room for improvement. I agree to convert this time-limited position to a permanent one. However, I'm worried if the police has sufficient professional. Can we keep pace with technologies? We often need to work with law enforcement agencies in different countries. Will more resources be devoted to tackle new crimes? Thank you. First of all, I thank Dr. Ng for supporting our proposal. There are 3 questions. Let me take the one on enhancing the impact of APEC on Hong Kong. Then my colleagues will take the remaining questions. If I remember members' question correctly, how can we expand the impact or the influence of APEC on Hong Kong? Well, I'm chairing a group which comprises members from the Tourism Board. This is a one-off event, but we will seize upon the opportunities to tell the good stories of Hong Kong and expand the influence of the meeting on Hong Kong. Over to my colleague. Thank you. These two position holders will be responsible for holding the APEC Finance Ministers meeting. They will be responsible for looking for venues as well as other logistics. We need to provide hotel accommodations, transportation arrangements, security arrangements, and so on. We plan to use the internal resources of the FSTB to meet the expenses. We have set aside sufficient funds within this financial year to meet these expenses. Thank you. We have two strategies. First, we train talent. We arrange for local officers to undergo training internationally. We have a task group on AML, that is anti-money laundering. The expertise of the task group is recognized by the courts of law in Hong Kong. In addition, we also use AI, that is artificial intelligence, to enhance the capacity of our task group. We have been working hard on building the platform of financial intelligence and investigation. AI is involved with technological enhancements. We want to enhance our capacity despite the fact that our resources are limited. Thank you, Ms. Carmen Khan. Thank you, Deputy Chair. First of all, I'd like to express my all-out support. I agree to convert the time-limited position in the Financial Intelligence and Investigation Bureau into a permanent one. As set out in the information paper, scams are very common in Hong Kong. In November 2025, there were about 39,500 cases. There were 8,600 money laundering cases in Hong Kong in 2025. From 2029 to 2030, there will be a review. And if we can turn this time-limited position to a permanent one, this can show the resolve of the government when it comes to anti-money laundering. So I'd like to hear from the police force how you will cope. Regarding the creation of time-limited supernumerary director positions at this FSTB, well, we can see our country attaches a lot of importance to us. The APEC Finance Ministers meeting will be conducted in Hong Kong, or part of it will be conducted in Hong Kong. As we just now heard from the Secretary, this is our first time ever. So how can you identify suitable talent? As for directorate officials, why they cannot double sideways? You have directorate staff members. So in the coming 11 months, why do you need two supernumerary positions amounting to about $7 million of staff costs? Thank you, Secretary. Thank you. I will take the first question and then I will ask the police force to answer your remaining questions. Well, we need time-limited staff members to be responsible for preparing for this event within this time. Within this period of time, there will be very frequent exchanges with different parties. First of all, we'll have to be in touch with the Ministry of Finance as well as the Ministry of Foreign Affairs. This is an opportunity for us to tell the good stories of Hong Kong under the principle of one country, two systems. We want to make the voice of China heard. from the perspective of Hong Kong. As we said, this event covers 21 APEC economies and a lot of hotel arrangements. This APEC Finance Ministers meeting is held the first time ever in Hong Kong. We are a capital of events in Asia. We have a lot of experience in this regard. On the tourism level and on the level of Interpol, there are different international meetings and conventions as well. And we will only spend when necessary. During this period of time, there will be frequent exchanges and communication with different parties, agencies, and so on. If these tasks are shared by existing staff members, this will affect negatively their work. We have already drawn reference from similar events and meetings. We don't just directly copy their experience, but we draw reference from them. But members, please rest assured, we make sure we are making very good use of our resources. We only spend when necessary. Well, Secretary, how do you identify talent? Well, internally, we have already started our work on this front. As this position holder will be responsible for laying the groundwork of the meeting. So whenever we have the green light of the council, then the position holder will start working as soon as possible. These position holders will be officers with a macro perspective. They will need to draw on their executive experience. They will also need to be detailed-minded. This is a task given by our country, and oftentimes we need to liaise with private organizations. That's why within the government we do have internal staff members that are equipped with such experience. But we give these officers these tasks within a period of time so that we won't let our country down. Thank you. Ms. Eve Zhong. We have been actively participating in AML work around the world, including FAF, that is Financial Action Task Force. We have been setting standards on AML, and we have also been leading the research conducted by FAF. We are also engaged in peer reviews. Some of our colleagues are qualified assessors. Last year, we conducted a peer review together with Malaysia. That's why we are well up in the anti-money laundering work. We also explained the work conducted by Hong Kong based on money laundering efforts, anti-money laundering efforts. Thank you, Mr. Alan Chan. Thank you. I support the staffing proposals put forward by Secretary Mr. Christopher Hui. My concerns echo Ms. Carmen Khan's. There are 2 time-limited supernumerary direct posts to be created. We don't want to engage retired officers. The 2026 APEC Finance Ministers meeting is very important. I believe we need an officer with hotel or MICE expertise. That officer will have to be very familiar with executive experience in relation to hotel or MICE. I agree that the head of event coordination team should be one with sufficient experience within the government. We shouldn't engage retired civil servants to fill both posts. We need different expertise. Hong Kong is an international financial center. There is mounting pressure on Hong Kong by the US. They may sanction us because of a lack of capacity for clamping down on money laundering. That's why it is reasonable to convert a time-limited position to a permanent one. Usually, time-limited posts will be taken up by a serving police officer. If we turn it into a permanent one, if this post is to be taken up by a chief superintendent of police, should we recruit globally? Should we draw reference from global experience? Even if we take part in a lot of anti-money laundering conferences and Interpol, we need to draw from their experience. And if we can recruit globally, then we can enhance our capacity and we can dismiss the excuses put forward by the UK and the US for sanctioning us. At least for the first ever time this post is recruited, we need to recruit globally.
多謝陳議員。
Mr. Ho, I thank Mr. Chen for the two suggestions as well as the support. We have been maintaining our anti-money laundering efforts, and well, I want to say that we're not discriminating against the retiree. We adopt a meritocracy principle. We will consider the member suggestions, but yes, we will not only consider retired officers. We will recruit those as long as they are capable. Second, I defer to my colleague, Ms. Eve Chong. Thank you. This is within the establishment of the government, so the officer to be recruited will have to be a permanent resident in Hong Kong. This is to comply with the requirements under the Basic Law. The Chief Superintendent, who has been in the post for 5 years, has already accumulated certain experience, and we believe that the superintendent will be able to prove that he is competent. Well, this proposal will be passed to the ESC, and we will ask for the approval of the FC. Do members agree? All right, thank you. Agenda item 6, amendments to the Inland Revenue Ordinance for implementation of the Crypto Asset Reporting Framework and latest arrangements of the Common Reporting Standard.
First,
let me welcome Under Secretary for Financial Services and the Treasury, Mr. Joseph Chen, Mr. Benjamin Chen, Commissioner of Island Revenue, as well as the other government officials for attending this item.
好，咁我哋首先邀請陳浩濂副
Let me first invite Mr. Joseph Chen, Under Secretary, to walk us through the paper. Thank you. Hong Kong has been supporting the idea of enhancing tax transparency as well as combating cross-boundary tax evasion. Since 2018, we have been complying with the Common Reporting Standard formulated by the OECD. There is exchange of information among different jurisdictions. The digital market has been developing rapidly. Each jurisdiction will have to plug the loopholes to prevent crimes. In 2023, the OECD announced the Crypto Asset Reporting Framework so that there is automatic exchange of tax information among jurisdictions. the relevant due diligence requirements are incorporated into the new framework. In the 2025 policy address, it is mentioned that the government will introduce legislative proposals into the LegCo in 2026, such that reporting crypto asset service providers will be required to collect the information specified under the new framework starting from 2027 for the IRD exchange with partner jurisdictions starting from 2028. The government also plans to implement the amended Common Reporting Standard starting from 2028. Under the new framework, we will put in place new measures to provide convenience to crypto asset service providers. We will set up a new framework. We will also promulgate guidelines on the IRD website. We will come up with a list of frequently asked questions. The IRD will also set up a dedicated working group to respond to any technical inquiries from the industry. Also, starting from 2024, the OECD has been conducting peer reviews on the effectiveness of the Common Reporting Standard. The OECD is of the view that Hong Kong should step up penalty for any non-compliant financial institutions. In 2026, there will be a review in this regard so that we can maintain our status as an international financial center. We do not want to be listed as an incooperative tax jurisdiction, so that it would not add to the burden of other tax jurisdictions as they work with us. We will introduce technical amendments to the IRO in order to implement the new framework proposed by the OECD. The amendments will not affect the relevant measures to be put in place. We have already kickstarted a public consultation. The consultation will end on the 6th of February, which is this Friday. Stakeholders in general support our legislative proposal. In mid-January, we conducted 3 exchange sessions. We consulted members of the legal sector as well as other stakeholders. Today, we want to listen to members' views. We hope that by the first half of this year, we'll be able to introduce the bills to LegCo. I'll now ask the Commissioner to brief members on the legislative proposals. Commissioner, thank you. The Undersecretary has talked about the purpose of the legislative proposal, so I'm not going to repeat the details. I'm going to focus on the specific amendments now. To implement this framework, the OECD came up with a series of templates and standards. We suggest that we incorporate these standards into our own framework. And this includes introducing relevant definitions, reporting nexus, criteria applicable to reporting crypto asset service providers, scope of information to be reported to the IRD, and due diligence procedures. I'll now talk about the in-scope crypto assets. Relevant crypto assets refer to a digital representation of value that relies on a cryptographically secured distributed ledger or a similar technology to validate and secure transactions. They can be traded or transferred in a digital manner. However, the relevant crypto assets do not include the following. First, central bank digital currencies, for example, ECNY, and specified electronic money products. For example, stable coins are packed with a fiat currency. Also, the cryptocurrencies for which RCASPs have adequately determined that they cannot be used for payment or investment purposes will not be included in the scope. RCASPs include any individual or entity that as a business provides a service executing exchange transactions for or on behalf of customers. Examples include trading platforms, dealers, brokers, operators of crypto asset automated teller machines. do crypto asset service providers have to comply with the due diligence requirements in the jurisdiction? Well, it depends on the connection between the service provider and the particular jurisdiction. Well, you have to take into consideration whether the service provider is an individual or entity tax resident in the jurisdiction, and whether the entity has the obligations to file tax returns to the tax authority in the jurisdiction, and whether the entity is managed from the jurisdiction. The new framework will cover the following 3 types of transactions. First, exchanges between crypto assets and fiat currencies. Second, exchanges between one or more forms of relevant crypto assets. And third, transfers of crypto assets. As for the scope of information that is subject to reporting, for tax jurisdiction is considered a jurisdiction that Hong Kong needs to exchange information with that jurisdiction. That means if there are any exchange agreements between Hong Kong and the jurisdiction, then that jurisdiction will be regarded as a tax jurisdiction. If the tax resident has to pay tax in that jurisdiction, then that jurisdiction is considered a tax jurisdiction. And the scope of information subject to reporting includes identification information of each reportable user and identification information of the service provider. As for due diligence, the service providers must apply the due diligence procedures to obtain self-certifications from the crypto asset users to confirm the reasonableness of such self-certifications. The service provider must also identify the crypto asset users' jurisdictions of residence. They should also identify whether the crypto asset users are reportable users and whether the entity crypto asset users have controlling persons, which are reportable persons. We propose putting in place the following arrangements. First, service providers may carry out the same due diligence procedures in respect of non-reportable users so as to provide more flexibility in adopting which approach for collecting information to reduce compliance costs. We will publish the list of reportable jurisdictions and partner jurisdictions on the IRD website. Also, we will require all service providers to keep due diligence-related records for a period no less than 6 years. We'll also ask all service providers to register with the IRD, and we will empower the IRD to investigate so that they could obtain information from the service providers. If there is any non-compliance, the IRD will impose penalty. Now I will talk about the latest amendments to the Common Reporting Standards. They cover digital money products, derivatives referencing crypto assets and investment entities investing in crypto assets. There are additional reporting requirements in respect of account holders. There will also be new definitions and due diligence obligations. These are all amendments promulgated by the OECD, and we must incorporate them into our latest legal framework. Lastly, in response to the comments made by the OECD in the peer reviews, we suggest that we enhance the existing administrative framework to more effectively identify reporting entities. We will ask all financial institutions to register with the IRD, and this practice has already been adopted in the UK and Singapore. We also suggest enhancing the existing data storage requirement. we ask financial institutions that have already terminated its business to keep the relevant records. Also, we propose adding a new penalty for institutions involved in non-compliance. We can impose penalty on them. Again, this practice has been put in place in the UK and Singapore. In terms of our implementation timetable, we launched a 2-month public consultation on the 9th of December last year, and the consultation will end this Friday. In January this year, the IRD arranged engagement sessions with relevant stakeholders. There were 3 sessions in which we explained the amendments to them, and we collected feedback from them as well. So far, we've got positive feedback from stakeholders. As for the peer reviews, they will be conducted by the end of this year. In order for us to retain the favorable ratings and to reinforce our status as an international financial center, we will table legislative amendments to the LegCo. We hope that we will be able to implement the enhancement measures once the bill is passed. After that, we'll also table legislative proposals to implement the crypto asset reporting framework and the latest arrangements of the common reporting standard. If the bill is passed, the relevant measures will be put in place starting from 2027. And then in 2028, there will be a first information exchange with the framework partner jurisdictions.
Thank you. 4 members have pressed the button to request to speak. They are Dr. Johnny Ng, Dr. Webster Ng, Mr. Alan Chen, and Ms. Carmen Khan. Dr. Johnny Ng, please. Thank you. Thank you, Chairman. Questions on 3 fronts. First of all, compliance costs and fairness. How does the enhanced cryptocurrency tax requirements provide clearer guidelines for members of the public? I believe this is more complicated. How can you make sure they can fulfill the reporting obligations at a reasonable cost? How can you ensure fair treatment? There is no additional burden on data security and cybersecurity. This framework requires a lot of personal or transaction data, and there will also be auto exchange. How can you ensure these sensitive data will be protected? We need to prevent data leakage or unauthorized access or storage of information. Regarding competitiveness and economic impact, how can the government ensure the new framework will not hinder Hong Kong's development in relation to digital assets? We are an international center for digital assets, especially for Web3 or new tech enterprises. How can you make sure these areas will not be negatively affected? Thank you. I will take the first and the third questions, and then I will ask the Commissioner to take the second one. On compliance costs, we will roll out measures to facilitate the service providers who need to report information. For example, there will be a platform for the reporting framework, and there will also be relevant guidelines and FAQ on the website of the Inland Revenue Department. There will also be a dedicated task group to provide technical support to the industry. In our consultation process, we met with the industry this month. They included Web3 service providers. We have already taken their views on board. We will take them into account. When we enact different ordinances, we need to reduce compliance costs in order to facilitate business. On potential impacts on competitiveness, I have 2 points to make. This legislative amendment is to make sure that we meet the requirement of the OECD. By contrast, If we fail to meet their requirements, this will affect our reputation as an international financial center. We may be assessed as a tax jurisdiction that does not comply with the requirements. In other words, when we make such amendments, this will promote our further development as an international financial center. The OECD has different requirements. While we, together with other reportable jurisdictions, comply with the same requirements imposed by the OECD. Commissioner. On automatic exchange of tax information, there are strict regulations in relation to the legal framework. This is an international agreement. There are strict provisions. They provide that these data need to be kept confidential, and only under special circumstances can they be disclosed to somebody else. Every single jurisdiction needs to comply with these requirements very strictly. Different jurisdictions have checks on cybersecurity or data security. In 2018, we practiced the automatic exchange of tax information when it comes to the reporting framework. It's been in practice for a long time. The OECD visited the Inland Revenue Department to inspect our systems and procedures. They made sure that they met their requirements. The OECD has very strict requirements. In fact, many tax jurisdictions fail to meet these requirements. As a result, other tax jurisdictions are required not to exchange information automatically with these jurisdictions which fail these requirements. In other words, the process is very rigorous. It ensures that all data are stored and shared in a very safe manner. Next member, Dr. Webster. Thank you. I have two questions. Eligible non-profit entities are listed as organizations that do not have to file the tax information. How can you make sure that this will not give rise to a legal loophole of tax evasion? Will there be any mechanism for the FSTB or for the Inland Revenue to make sure that these organizations actually meet the relevant criteria? Next, in relation to the crypto asset reporting framework, as I understand, it is covered under the Inland Revenue Ordinance. However, as for the Esprit roadmap and the stablecoins ordinance, will you consider holding interdepartmental task force? Then you can prevent regulation silos. Mr. Chen, thank you. Thank you, member, for your questions. Member's concern is correct. Web 3.0 or digital asset, there are different regulations. Today, we focus on the Inland Revenue Ordinance. We need to comply with the OECD's requirements, hence our legislative amendments. And the definition used by the OECD is crypto asset. As for FATF, virtual asset, this term is used. The definition is asset whose value is expressed digitally and transfer is allowed. As for the definition of digital asset under AMLO, we have drawn reference from the definition used by FATF. For example, when it comes to taxation, we need to comply with the requirement of the OECD. As for the area of anti-money laundering, then we need to be in line with the definition used by AMLO. The definitions may vary from different perspectives. The details of the definition of crypto asset and virtual asset is different. And from the point of view of law, there are differences. That is because there are different policies and different regulatory requirements. But when it comes to overall policy coordination, different regulatory organizations will provide more guidelines so that the industry will find it easier to understand what they have to do in order to fulfill the legal and statutory requirements. As for the first question, I will ask my colleague, Ms. Florence Lam, to answer. Thank you. Under the reporting framework, there are exemptions, there are exempted organizations, under the framework, crypto asset service providers do not need to conduct due diligence. Under the definition of the OECD, these are entities with lower risks. Examples include international organizations, government entities, or central banks. They have lower risks. For some entities, they do not have to work on the controlling persons if they have already conducted due diligence. If less than 50% of their total income is from passive income, then these are considered to be proactive entities. All right, time's up. Next member, Mr. Alan Chan. Thank you, Chairman. I understand very well that the common reporting framework is under the OECD. 121 countries are already practicing this. Most of them are international financial centers. If we aren't complying with these requirements, we may be assessed as not cooperative. This will take its toll on our status as an international financial center. We don't want the US to get ahead of us. However, in the bill, that is the Genius Act, they do not have the obligation to make declarations to other countries. This is their privilege. Competitiveness is top of mind right now. Decentralization, probably they want to have more flexibility. What about our reporting threshold and requirements? Are ours stricter than the ones used by the US? If so, we will probably lose out on our competitiveness. For example, will the Genius Act affect our strategies? With our latest stablecoins ordinance, can we meet our goal? Mr. Chen, thank you. Moving forward in the peer review, we need to respond by the end of 2026. We then can maintain our reputation, and then we will not be assessed as not cooperative. This really matters, because if we are assessed as a non-cooperative jurisdiction, then other aspects of our financial and professional services will also be affected, and the compliance costs will be impacted on. That's why we have factored in the overall interest of the financial industry when we proposed these legislative amendments, including Web3 as well as digital asset industry. And the Inland Revenue Department Commissioner will share more findings with you.
Commissioner, I thank member for the questions. On the question about the U.S., as the member said, it does not take part in the common reporting standard because it has its own factors to consider. In relation to this crypto asset reporting framework, however, the U.S. is taking part in it. So according to the plan of the U.S., in 2029, the U.S. will exchange information with other tax jurisdictions for the first time. So to clarify, the U.S. is taking part in the crypto asset reporting framework. As for the point about stable coins, as explained earlier, if the stable coins is packed with a single fiat currency, then the relevant entity could be exempted from the reporting framework. Simply put, if the stable coins is packed with Hong Kong dollar, then the entity will not have to report the asset. However, a certain currency could also be packed with other kinds of assets, such as precious metals. Then in this case, the relevant entities will not be exempted. All participating members under the reporting framework have to comply with the same standards, be it the US or Hong Kong. If you are to take part in the reporting framework, you'll have to abide by the same standard. Thank you. Next, Ms. Carmen Khan. Thank you, Chairman. I echo what Undersecretary said. Hong Kong as an international financial center, the financial institutions here have to follow the factor as well as the common reporting standards. Now, I'd like to ask the government to listen to the trade's views in the public consultation exercise. We understand the difficulties faced by financial institutions. You said that by mid-2026 we'll have to respond to the peer reviews. Well, we have to be reasonable here. So I hope that during the public consultation you could listen to the industry's views. You said that if the bill is passed, the measures will take place starting from 2027. I'm not sure if you have already listened to any major views during the 3 engagement sessions. That's my first question. Second, the public consultation exercise will only end on the 6th of February, and this consultation exercise focuses on the crypto asset reporting framework and the latest arrangements of the common reporting standard. Well, since the public consultation is still ongoing, would you like to collect views from the industry on a particular area? Commissioner, I thank the member for the questions. First, I have noted the member's views. We share the same concern. Indeed, like the member said, the financial institutions in Hong Kong face various reporting standards and requirements. And these standards are set by international organizations to lower the compliance costs and to facilitate financial institutions in making the reports. We try to put in place measures as much as possible. So during the 3 engagement sessions, apart from telling them about the latest arrangements, we also take the opportunity to listen to the difficulties faced by industries so that we know what to watch out for as we roll out the amendments. In fact, the OECD 2 years ago came to Hong Kong. When they conducted the review on Hong Kong, they met with some industry players during the visit. So the OECD is well aware of the situation in Hong Kong. We worked with the OECD on how we could comply with the new standards. The OECD tries to roll out measures that could facilitate the compliance of our industry. So I believe that the industry could actually comply with the standards. In terms of the views collected during the public consultation, in general, industry players understand why we are rolling out the arrangements and they support our proposals in general. However, they would like clearer guidelines from us. Also, they are concerned that as they try to comply with the requirements, whether there will be a system that could facilitate their reporting. We will work on this. We will actually build a new system to facilitate their reporting on crypto asset. Also, on our website, we will promulgate some new guidelines. And we will publicize all the information about the reporting guidelines and standards so that industry players know what kind of information they have to provide in their reports. Chair, I hope that the result obtained from the public consultation could be shared with us members. Thank you. Next, Mr. Duncan Chu. We all understand that we have to comply with the OECD standards. We understand there is a need to enact legislations for that. However, I also share the same view with other members concerning the definition. How can you make clear the different types of assets and entities? Crypto assets are still being developed. How can you define what should be regarded as crypto assets? While the OECD asks us to respond to the review and implement the measures, do we need to follow all the standards? I see that you said CBDC as well as the specified electronic products or currencies are not regarded as crypto assets, and some sort of stable coins are not regarded as an in-scope crypto asset either. And also NFT is not included either, but NFT can be used for investment purpose too. So if you do not make the definitions clear, it will be very confusing. Do we have to include so many crypto assets under the definition? Also, should all transactions be included in the report? For example, earlier we had a discussion on other OECD standards. For some, we do not have to roll out KYC, know your client. Will we, for example, set a cap in terms of the amount for a certain report to be made? Also, there is no mention in the paper that stable coins are excluded from the scope. Please explain. Under Secretary, I thank the member for the questions. Indeed, we share the same concerns with the member. First, to comply with these kinds of international standards, we also at the same time try to lower the compliance costs. We have to strike a balance in this regard. Second, we have been paying attention to the latest standards promulgated by international organizations. The information we shared with members just now, they are updated from time to time by the international organizations. Also, we are here today to listen to members' views. For views raised by Ms. Carmen Khan and Mr. Gundan Chiu, we take note of them, and we continue to collect feedback from the industry, and we will consider all these views before we submit the legislative proposals to LegCo. Perhaps Commissioner could supplement. Commissioner, I thank the member for the comments. In relation to the definition of crypto assets, first I have to explain this. This definition is not formulated by us. As mentioned in the opening, the Crypto Asset Reporting Framework is promulgated by the OECD. The OECD came up with a set of standards, including the definitions for crypto assets. And the definitions we shared with members just now are exactly the same shared by the OECD. And all members that take part in the reporting framework will have to comply with the definitions. So in terms of the definitions, well, there is not much room for us to come up with our own definitions, I'm afraid. Second, about the point of stable coins. In the definitions, there are no specific mention about stable coins. However, it is mentioned that there are 3 items that are not covered under the framework. And one is specified electronic money products. And according to the footnotes of the standards promulgated by the OECD, if the product is a stable coin and if the pegged asset is a single fiat currency, then it would be regarded as a specified electronic money product, and therefore stable coins could be exempted. Therefore, as explained just now, for individual stable coins, they could be exempted from the framework because it is explained in the OECD's footnote that this could be exempted. I believe all members have raised their questions. As you have heard from members, we agree that we should comply with the international standards. However, we do not have to go beyond the standards set by international organizations in order not to compromise our competitiveness. And we also do not want to see situations where the compliance costs are boosted. The administration plans to, in the first half of this year, table 2 legislative proposals to LegCo. Do members agree? All right, we all agree. Agenda item 7, any other business? There being no further business, meeting adjourned. Thank you.